Hello, I'm Mark Wilson and I'm talking to you here from our digital garage in Hoxton Square, London. And we're here to talk about Aviva's 2017 interim results. And the numbers show Aviva is delivering. We're seeing growth in both bottom line profits and top line sales. And both of these results are broad-based. They're broad-based geographically and through multiple product lines. What you are seeing is the result of the foundation we put in place over the last few years. And the numbers really speak for themselves. Operating profit is up, it's increased 11% to £1.47 billion. And that's in fact the fourth year in a row that operating profits are up. What about earnings per share? Well, EPS is also up 15% to 25.8 pence. And you know, I and the team, we remain pretty confident that we can keep growing earnings by mid-single digit over the medium term. We've also announced today an interim dividend of 8.4 pence per share. That's an increase of 13%. And you know, I hope that's a very welcome piece of news to our 500,000 retail shareholders here in the UK. And those same shareholders have seen the dividend rise by 50% over the past 4 years. Our businesses are on the front foot. They're delivering growth, they're picking up market share. But I should say that market share isn't what we strive for. That growth in market share is just the result of a clear strategy and some pretty good execution from our people. Now, you know, this is a very clean, clear set of results. And that's just the way I like it, and it's just the way I know our shareholders like it. So what about in our performance around the geographies? Well, in our home market here in the UK, we are growing and we are also investing. The UK and Ireland operating profit increased by a very creditable 8%, despite all the uncertainty and political turmoil we've seen in these markets. In our core businesses of general insurance, long-term savings, protection and annuities, we delivered double-digit operating growth. What about our UK general insurance business? That's the largest general insurance business in the group. It grew operating profit 7% and achieved very positive combined ratio of 93.2%. That's our best UK combined ratio in 11 years. I think that's pretty satisfactory as well. We've also announced a new 10-year exclusive distribution agreement with HSBC. Now, obviously, this is one of the UK's biggest general insurance deals. They're a fine bank with an extraordinary network and distribution ability, and it really sets us up well for the future. And what about Aviva Investors? Operating profits up 45%. Now, the flagship range of funds AIMS, that increased as well. That added on another £3 billion to be £12 billion in assets. And we've seen, I think, some sort of halo effect from that because the inflows we're getting into Aviva Investors are now broad-based. High yield fund, fixed income mandates, quite a number of mandates over this first half. So we'd expect the fund flows to continue pretty strongly in the second half. Now they know they've still got more to do, but it's going in the right direction and I'd expect them to keep delivering as we move forward. Looking internationally, you know, the benefit of Aviva is that we have about half of our business outside of the UK. This is a deliberate strategy and it's part of our investment thesis. And you know, for this set of results, our success and growth has been very broad-based geographically as well. Europe has shown considerable improvement with operating profit up 9%, led by good results in Poland, France, and you know, Turkey's also up very strongly. Asia also performed well with sales up very strongly right across the board. On the other hand, Canada had a challenging half year. Higher claims and also the fact that we strengthened our reserves really did weigh on their results. But you know, I've spoken to the team and I've seen their plans. I'm confident they will address that in the second half of the year. What about digital? I'm standing here in our digital garage, of course. Now, our aim is to make insurance simpler, more convenient for customers. Registration to MyAviva, that's our online hub, they're up 1 million to 6 million, and we're expecting a very big next half year on that as we bring in our Friends Life customers, 4 million of them. Now, it's true that more customers are buying insurance digitally. We've seen quite decent increases in that. General insurance premiums are up a further 13%. But really, the story about our digital business in the first half of the year is our intellectual property. Our intellectual property, the software we're developing, really is world-class. We believe it can reinvent the insurance industry globally. Watch this space, there's much more to come. And what about Aviva's financial position? Because we can't do much without a really strong balance sheet. Well, our capital surplus has increased to £11.4 billion. That's a ratio of 193% of our target working range of 150 to 180. And frankly, this gives us some very interesting options. We've started an initial £300 million share buyback. We keep on generating surplus capital. And as we do that, we'll consider bolt-on acquisitions, we'll consider debt repayment, and we will also consider further capital returns to our shareholders. And what about to our strategic agenda, in particular our oaks, acorns, and apple trees? Well, the oaks are delivering, they're giving us cash and profit. The acorns are growing, that's what they're supposed to do. And you know, we've done a bit of work pruning some of the apple trees, haven't we? I'm now getting into a pretty good space. I'm happy with the high quality franchises we have left because we've taken out some of the businesses where we didn't have a strategic advantage. Now that means the management team and I can spend less time pruning the apple trees and more time focusing on growing the business and getting the products our customers need. Of course, we have announced the sale of the Spanish business, and we've also, just in the last couple of weeks, announced the sale of Friends Provident International, which is really a business that didn't fit with our profile, it didn't fit with what we wanted to do, and so I think that's a very good sale for all parties. We've also been investing, which is important. We've taken 100% of our JV with Vietnam Bank in Vietnam. We've integrated RBC into Canada, and of course we've done the JV with Tencent in Hong Kong, and that promises to have a pretty exciting future, at least we believe. So there's a lot to do on the strategic agenda, but now we've done that fix phase, the team and I are very focused on delivery. You know, I always get asked, are the numbers good? And yeah, when you look at numbers, it's pretty hard to quibble on this one, isn't it? We all at Aviva feel the same. It's not time for high fives. We're not going to crack open the champagne yet, because success is judged over the long term. It's judged year after year, getting consistent, reliable results and delivering for our customers. And you know what? We're not there yet. What we want to do is reinvent the insurance world. We want to grow digital. We want to keep all of our businesses growing. But these results, backed up by our last set of results, I think clearly show we're moving forward.